Hello guys, this is Thor. In today's video, I would like to show you my exact thought process from today's price action that made me almost 10R, which was a good day, not gonna lie. I traded both morning session and the afternoon session. So for the morning session, the first thing I was looking at is how did we trade an overnight session. So the first thing I noticed was this buy side raid, and then right after that we disrespected this fair value gap and broke the structure to the downside with that candle right there. So once it did that, I was waiting for this low to be formed first, and once this candle closed, it created the sell side, right? Sell side, and we have a buy side right there. So once this high and low formed, now we have a framework to work in. This is our dealing range, right? Once it did that, I pull up the fib, and I would like to see where are we in terms of the price. Are we in a discount? Are we in a premium? If I'm gonna go short, I would like to be short in a premium area, right? So I was looking at this area right there, premium, and right away my eye goes into this fair value gap right there, which is a premium fair value gap here. Premium fair value gap 12. All right. Actually, let's refine that. I'm not interested in this portion of the fair value gap because it's this small portion of this fair value gap because it's in discount. So before New York Open, I wanted to see price trade into here to later sell off, and I would consider that trade above this fair value gap as a Judas swing. So going further, New York Open, boom, now we are in that fair value gap, right? Once it does that, once it trades into here, I go on the 1 minute chart or 30-second chart. Sell side, buy side. All right. Now once it does that, what I'm waiting for here is break of structure to the downside, break this low with a fair value gap, right? That's what I'm waiting for. And hopefully if it gives me an entry in a fair value gap after it does so, I would like to go short and target this sell side over here. That was the idea. Boom. 10 a.m. red folder, new news release. So with that price action, we inverted this fair value gap over here, right? Market structure shift. Now we have a huge candle, right? This is 52 handles on Nasdaq, which is massive. So I would like to refine the other PD arrays I'm seeing in this price action, which is this inversion fair value gap, so I can use a tighter stop loss when I go short. So what I'm waiting for here is the next candle trades into this inversion fair value gap or touches the low, I'm short. Where am I going to put my stop loss? So what I'm going to do in this case is I will look for either the C of the inversion fair value gap or the high. That would be my stop loss. In this case, I use the high, and I'll tell you why. So let's go on to the next candle. Boom, it trades into here. I go short. These are signatures, by the way. It's respecting the inversion fair value gap low. It's respecting with the bodies, the 15-minute fair value gap here. These are the signatures, and I love to see those things. So I entered short here. This is also 30-second fair value gap, and my stop loss was about somewhere about here, like probably one handle above the inversion fair value gap high. So here, probably like something like this, 19. And I would like to see this whole area, the fair value gap here, to stay open. Why? Because in 30-second chart, this is a fair value gap retest, and it should sell off if it's really bearish, right? So I trust that. Go further, boom, sold off, a very massive candle, and boom, I'm out. The sell side is rated, the trade is closed. Now let's take a look at the afternoon session. Let me delete those real quick. Okay. So I'm gonna wait for, in this case, until like 12 or 1. Let's do 12. 12 o'clock. I'm waiting price to form a low on 15 minute. Oh, that's bad. We were here. Okay. I'm waiting for a swing low. There's a swing low which was violated. I'm not interested in that. Violated again. Let me just now. Okay. Now with this candle close, now we have a swing low here, which is the sell side here. Sell side. Change the color real quick. All right. Now once it forms this sell side, we have a buy side here. Mark that too. Okay. Once it forms the sell side, now you can look at the dealing range, right? So the dealing range would be from high to low here, and we have a fair value gap here in a premium area rather here. Again, I'm gonna disregard the part that's in discount, so I'm gonna use the EQ as fair value gap, premium fair value gap low, right there. Let's mark it as premium fair value gap. Now going into 1 o'clock. Now I'm waiting for either trade into here. Oh, we also have, sorry, forgot to mark here. This fair value gap right here, which is a discount fair value gap in this case, and it got violated, right? So I'm waiting. This is 12:30, still lunch hour. Now with this candle close, market formed a short-term buy side right there. Now we have another dealing range here, which is a short-term dealing range from this this low to this high, right? And going into 1 o'clock, it takes out that that buy side. Once it does that, now I'm interested. So I go on the 1 minute chart, right? So there's a significant price action here, which is, I'm about to explain it. This is the sell side. Oh my god, someone is playing music. I hope you guys can hear that. Anyways, so this is the buy side now. So on this time frame, from this low to this high, this is our short-term dealing range, right? Buy side. Now we can mark this as buy side rate. This is also 15-minute buy side, just to remind you. Once we took that buy side on the 15-minute, there's a significant price action here. It broke below this 15-minute discount fair value gap, which is massive to me. That's why I was interested in this price action right there. Once it breaks below this fair value gap, now it shouldn't really come back up here. So these fair value gaps here should be a breakaway fair value gaps. So now I'm looking for a potential short entry, right? We have this inversion fair value gap. Let's mark it as inversion fair value gap high. Middle, right? Copy paste. Inversion fair value gap low. But again, since we traded below this 15-minute fair value gap, it shouldn't really come back up here. It might come up to the 15-minute fair value gap high, but I wouldn't like to see it trade into this area here. So I anticipate this area as a breakaway gap. So once these two up close candles formed, my eye right away goes into this this price action here, because these up close candles, once it breaks below, this is a confirmed order block, bearish order block, right? And this is in short-term dealing range in a premium area. So I'm interested in going short here. Let's mark that as bearish order block. And let's look at the mean threshold of that order block here. Now we break below, order block confirmed, and boom. That retest of the order block, the opening price of this candle, is an entry for a short position targeting this sell side in premium. That's important, or equilibrium at least. Let me close this. And first stop loss, okay, this sell side is the target. First stop loss you can use either this high, or the block high, or this 15-minute fair value gap. So why can you use this 15-minute fair value gap low? It's because excuse me guys, it's because of this mean threshold shouldn't be really violated. So in this case I used the order block high just because it's a tight stop loss anyways, 8 handles, that's nothing, so I'm fine with that, targeting this low. So once I enter that, I'm looking at the counterpart of the market, right? So my eye goes into this fair value gap right there. Let's mark it like that. Sorry guys. This fair value gap here. But this fair value gap has no significance for me, just because if I go back on the 15-minute, you'll see there is no liquidity here, or whatever. So that fair value gap on the 1-minute chart should be disrespected with speed, and that would be a significant signature for me. That's telling me that I'm on side with the market. So let's see. Let's move forward. Now we are trading into that imbalance, and boom, it didn't get violated right away, and boom, now it got violated. Once it does that, I'm looking at these imbalances right there. First one, let me just turn on, okay. The first bearish fair value gap were CB. Now you can roll your stop loss at break even, because it shouldn't really come above this fair value gap over there. So market creates another fair value gap here, which is really good. So now we have 3 PD arrays, right? First fair value gap, inversion fair value gap, and the second fair value gap, right? So your stop loss in this case would be safe if you were to put it at break even, or slightly in profit above this fair value gap, right? Now we traded into the first imbalance, first CB, gets violated. Now this has no significance for me. Second fair value gap, traded into, completely closed the imbalance. Trades one more time. Let's look at the CE. Couldn't even trade into the mid-level. It's probably 25% of this fair value gap here, which is a good sign. That means the order flow is strong. I like to see that. So once it does that and comes back down again off this fair value gap, now you can roll your stop loss at the mean threshold, and CE rather, of this fair value gap, or this high, or even above this inversion fair value gap, and it should be safe. So let's link this. and boom, south side is gone. And this was a 4.6 hour trade. So yeah, guys, thanks for listening me, and stay tuned because I'm gonna start making videos about a lot of stuff. But most importantly, I would like to show you. So I traded both sessions today, both morning session and the afternoon session, and my approach to both sessions, they're completely different. So you gotta treat morning session differently than the afternoon session. So if you want to learn about all those, make sure to subscribe first of all, and secondly, make sure to stay tuned. Peace, guys.